We are glad to have you on this month's edition of the Meet and Chat with the Professionals, an online virtual session organized on monthly basis by the Finance Business Partners. The Finance Business Partners is a community of finance and accounting professionals who are committed to changing the narrative of the profession. We intimate our members on relevant and valuable subjects as well as industry-related happenings via our everyday interactions and contents. This session this evening is reaching you via the collaborative effort of the Finance Business Partners and Accounting Job Hub. If you are just joining us for the first time on this session, you are very much welcome, and for our existing members or people who have joined our previous sessions, it's going to be value-packed as usual for your listening pleasure. So the topic for this evening's session is making yourself relevant in the face of emerging tax trends. The communities chose this topic because of the gap identified with the recent and consistent changes in the Nigerian tax system as well as global taxation. You would agree with me that in the face of changes, there exists the need for new techniques and ideas in profiling working solutions. So our guest for this session, Mr. Adeyemi Afolabi Smith, is a highly resourceful individual, a seasoned tax expert par excellence, and a visionary leader. He is vast and experienced in tax matters, citing his experience, exposure, and engagements that he has undertaken or that he continues to undertake on everyday basis. So over the course of his career, he has worked in numerous firms and undertaken various roles and engagements, including in the Big Four, and he is presently the tax manager at Pedabo, an accounting firm. So his knowledge and experience places him in the best capacity to do justice to the topic we will be reviewing this evening. We hope to learn as much as possible from his wealth of knowledge and experience. So during the course of the questions, if questions emanate, you could use the chat box, as our guest for the evening will be attending to questions after his presentation. Then our various social media handles will also be posted in the chat box too, so you can check out what we've been up to in the community. And if you would also like to join our everyday interaction, so I implore you to have a value-filled time with us this evening. So, Mr. Adeyemi, if you are on the call, you can get started with the session proper now. Good evening and welcome once again.
Good evening, everyone. Thank you so much, Idris, for the introduction. I'm glad to be here. I find this a privilege to talk to professionals and people of like minds or aspiring professionals who find the accounting industry a good terrain to practice. Thank you for having me. It's a privilege being here. Permission to share my screen, please.
Yes, you can share your screen.
Okay.
Your screen is visible now.
Okay, great. Okay, so it's a good thing that hold on, please. Okay, so it's a good. Can you hear me now? Am I audible?
Yes, we can hear
Okay.
you.
Can you also see me?
Yes, we can see you too.
Okay. So, talking about making yourself relevant in the face of emerging tax trends, you'd agree with me that a lot is changing in the tax terrain. Quite a whole lot is changing, and as professionals, the need for us to be well abreast in terms of current developments, what is happening in the industry, and a lot of other things that affect tax matters, But before getting to where we'll talk about some of the major criteria in terms of how to build up relevance in tax practice or in the field of the tax terrain, we would understand that in life, two things are inevitable, and those two things are debt and taxes. Of course, quite a lot of people don't like hearing when you hear the word death. It sends a different message entirely, to people. But again, these are two short things, and that is because for every country that exists, every economic environment, ordinarily the basis for survival should be taxes, right? Which means that the government, of course, does not have any funds of its own and would rely on income being earned by, companies, individuals, or other persons or other taxable objects or other taxable presence, being liable to tax in their jurisdiction, from which countries will use the money, fund their operations, and build up infrastructures, public infrastructures, some other fiscal tools in the economy, and quite a lot of things. And so you'd agree with me that no matter how you exist, as an individual, as a company, it's certain that at some point when you start to flourish or when you start to exist for business purposes, you'd be liable to paying taxes. And of course, at the end of it all, right, everyone is still going to leave the face of the earth, But again, it's only a matter of time before any of these two things catch up with persons or companies. So when we talk about tax generally, right, the basis for having tax or the basis for collection of tax ordinarily, right, is for government to be able to finance, infrastructures in terms of everything that gives benefit to the public or, to the welfare of the public. And you would also notice that, proud to 2014, we're not hearing a lot about taxes. When it comes to tax, fair enough, everyone just participates in the way that they can, no matter how small, But since the economy started experiencing dwindling revenue in terms of oil revenue from 2014, tax has been, efforts on tax generation has been intensified. It forms a major proportion of revenue to the government to finance its businesses. And you would also know that for a government parastatal, right, for the federal government, for instance, you only have two revenue pattern, and one is the oil revenue, the other is non-oil. Every other non-oil revenue comes from, all forms of taxes being paid, by citizens, companies, entities, parastatals, whatever. So prior to 2014, the business was booming because we had a lot of money from oil, but since the oil business degenerated, there's been quite a lot of aggressiveness on the part of government to make sure that, look, we get as much money as we can. And even in the Nigeria of today, where government is not doing, government is practically doing nothing, right? Citizens still have the obligation to fulfill their tax duties, civic duties by paying their taxes. And so when you tell people about taxes, everyone is like, there's no reason for me to pay tax because government is doing nothing for me. Ordinarily, they would have been correct if we were in developed countries, sane countries where you have functioning policies and implementations and accountability, where government is accountable to citizens. You can call up government when they are doing anything that when you want them to be accountable in terms of what you pay. But of course, this is Nigeria, our own very special country. But with time, we hope to get there. So down into the presentation, we cannot talk about taxation without touching into the evolution in terms of how we came about. You would agree that the British colonized us as a country. And in those days, there was no specific pattern on how to tax people or businesses or whatever it is that were. Even if you had businesses as at then, they were unstructured businesses, But, the British, they found a way to, create tax, generate a bit of income, make people pay, one way or the other. And Lord Lugard, when he implemented trying to centralize his tax policies, he introduced the Stamp Duty Proclamation. And the principles considered at that point was, okay, how do we even determine what to pay? And when should it be paid, or where to pay it to, or whom to pay, And they came about quite a lot of patterns in terms of, okay, who pays what, at what point do you pay anything, or things like that. Quite a lot of people were slave trades then, but you also had people who were also traders in terms of, petty traders, amongst the British and the British that colonized us at that time. So, tax wasn't that as popular as it was because, of course, the British were funding quite a lot of the operations. And so when it came to our own regulation as a country, you had all forms of taxes, being implemented. You talk about zakat. Zakat was being created so as to fund, education, spiritual, religious programs. And as at that time, zakat was only payable by Muslims, right? People who practice Islam. And so at that point in time where you are a Muslim and you practice Islam as a religion, right? You pay your own tax in form of what we call zakat, which the government will use to now, build up the little schools that they have, finance some of their spiritual and religious activities and things like that. And you also had the shuka, and the shuka was just for cattle rearers who paid from earnings from what they sell. People who do buying and selling of cattle. And that was the tax they paid, for dealing in that business terrain. And you also had the shakole, right? The shakole is still, is currently still obtainable in some of the rural areas that we have in the country. The shakole is when you have a farm and you make produce, right? And you sell the produce of that farm in the market. The shakole is what you pay to the kings, the chief, or to the head of community, wherever you operate, as your own tax, contributing to the quota for the development of your environment. And you also had Kudin Kasa, right? Kudin Kasa was more or less like an estate tax, so that was being collected on or to finance, property utilization. That tax was being used by government at that time to, put up some structures for administration or, things like that. And so you wouldn't have much revenue from this because quite a lot of people at that time were not into property per se, so quite a lot of properties were from government, being rented and you pay a token and all of that. And so, this was a way of the influential people could afford to have properties, paying their fair share of taxes. And you also had community tax, right? This community tax was being enforced on people, more like it's a tax applicable to everybody. As long as you stay in that community, you get to pay that community tax. And Owori, Owori is a tax. Owori in English means tax per head. And, people who pay this kind of taxes are people who does business, right, who render services. And so when they make money from all of those services they render in terms of helping other people to do things, maybe cultivate land, harvest crops, serve as business intermediaries in the market and all of that, they get to pay this Owori as the tax. And, that's just a bit of the history of where we are coming from in terms of where we've met ourselves in the taxation terrain in today's world. Now, you would agree with me that tax is broader, right? It's broader than just saying that it is revenue. The reason why you have developed countries being developed is because they collect the taxes and they use it to develop the environment. And that's why you see a lot of development in the outside world, UK, US, you see a lot of things working. You can decide to have education institutions, not being full fee from a particular level till you get to a level, not having to pay for medical care. You have all those kind of structures because there is an effective system of tax administration where government is being able to collect and use that money to, bring development to the environment. So it's more than being a revenue. It's a tool for development. And for countries to make decisions, a lot of times those developed countries, for instance, they make use of tax technology and data analytics. And for them, it's those are the key things, because how do you drive tax without bringing in technology? And how do you also drive tax without having data in terms of determining who to pay what, how much they make as income, or how our business faring, and things like that. So for business or policymakers, when they are drafting up tax policies, right, they put in mind that tax will continue to change. And of course, they have to keep making money so that the environment can keep getting developed. Now, of course, we all have the idea of why does the government collect taxes, or why does the government tax its citizens? I'd mentioned earlier, no government has monies of its own. And for you to have an equitable environment where you have fairness in the system, everyone should pay taxes. The only difference is that for those who are paying more taxes, for those who do well, they get to pay more taxes. And for those who struggle, they enjoy the same benefit like people who pay the higher taxes. Say for instance, government collects tax and does the road. So whether you're a rich man, you paid more taxes, or you're a poor man, you paid lesser taxes, everyone is still going to apply that same road. So every government needs to tax people, which is a basis for our tax collections. Now, coming to our own environment as a country, federal government has been doing quite a lot in recent times, talking about how to boost revenue. I want us to take our mind away from the use of this tax revenue, because if you, as a professional in this field, if you look at tax revenue from that perspective of utilization as what government does with it, right, you would not be encouraged to do anything, because government does maybe 10% of what they should be doing. And that's why you have quite a lot of companies and individuals like you and myself paying a lot of taxes. And, it's only being used for God knows what. The development and the taxes collected, they are not incommensurate measures. You find out that government reports that, we generated 2 trillion, we generated this. 2021, for instance, tax generated about 6 trillion. And from 2021 till date, I've not seen anything develop as an individual. I don't know if it cuts across everyone. And so, government decided to come up with VAT, and VAT was being implemented to say that, if you have not been paying taxes before now, we are giving you an avenue to make your declarations of your assets and income. for the past 6 years, covering 2011 to 2016. So that made a lot of people, because of the pressure on the economy at that time and the impact of having, a new president, having a chairman, an executive chairman of the FIRS that had vision for collecting money and channeling it to federal government to use it to develop the environment, and also the fear of prosecution, right? You had a lot of people paying taxes, making declarations. We have quite a lot of clients that have gone to say, you know what, I just want to regularize, right? Because there were incentives to VAT to say that if you pay this tax or you make this declaration, for those years we'll no longer audit you as a company, and for those years you do not get to face any other tax scrutiny or prosecution for what you've disclosed. So it gave, it more or less like gave an avenue to say that come out to us 100% and do a full disclosure. So as long as you do that, even if your disclosure was not 100% and was just about a few percentage, it simply means that you've been able to exonerate yourself from paying interest and penalty from non-compliance or being sanctioned by tax authorities for non-compliance. And, so VAT came, quite a lot of people participated, and the government generated a lot of money at that time, quite a lot of money. And so because of the impact of VAT being implemented in 2018, in 2019, government decided to introduce VOAS, and VOAS is a voluntary offshore asset declaration scheme. And so what that is saying is that where you have foreign assets that give you money, or you have, foreign properties, or you have all forms of declarations to make, right? This is the time to come and do an asset regularization. And because government felt that, look, if we made this so much money for telling people to disclose, make a disclosure for 6 years. So imagine if we make it 30 years, imagine the kind of money we would be getting and revenue that we'd be getting as a country. And of course it was implemented, but I'm not sure they generated up to 10% of the money generated from VAT, because quite a lot of people that participated in VAT did not see others who did not participate facing any sanction, right? So it means that they were saying it like, oh, I've just wasted my money, I shouldn't have done this declaration, because nobody was coming after, anyone, except in recent times when federal government released a press ruling recently that said that they were going to do post-implementation of VAT, to check people who have not made declaration, and they've been able to see quite a lot of things happening. How have they been able to, go without fulfilling all of those compliance or making such declarations? And so the VOAS has not really generated any progress in reality than the VAT was able to generate. And so in Nigeria, for instance, as a country, we have various forms of taxes ranging from direct tax to indirect taxes, right? These are some of the cogent ones, although not list not exhaustive. You have the company income tax, which is payable by companies on the profits they make, in Nigeria. A company income tax, for instance, would the tax you'd pay would determine on your status as a business. So in Finance Act 2020, right, there's been introduction to say that look, for all entities that have turnover between 0 naira and 25 million, right, you are deemed to be small companies, and because of that, your tax is at 0%. More like that was being done to corroborate the government's initiative of ease of doing business in Nigeria. And so they felt that if you are making 25 million as a revenue, maybe you still be struggling to, find your feet, run your business and all of that. And that was the spirit in the drafters at that time. And so if you have income of above 25 million, and so between 25 million and 100 million, you're deemed to be medium-sized companies, and your tax payable is 20% of your profit. And where you have turnover above 100 million, you're seen to be the big boys of the economy, and your tax is at 30%. And so if you want to seek clarification on this, you check Section 105 of Company Income Tax. Section 105 talks about interpretations, defining what is what is what tax to be paid, definition of some key terms in terms of where you have complexities in understanding and things like that. And so apart from company income tax, you also have education tax. Education tax had always been 2% of assessable profit, but had been increased, by Finance Act, to be 2.5%, which means that companies will pay more. And for value-added tax and withholding tax, those are transaction taxes. And so value-added tax and withholding tax, value-added tax is now at 7.5, and withholding tax, ranges from 5 to 10, depending on whichever where your transactions fall. And also the hydrocarbon tax, which is payable for companies operating in the oil and gas sector, and personal income tax payable by individuals or business names. Stamp duty is payable by anyone, as long as you deal in a dutiable document. Stamp duties could be fixed or ad valorem, depending on what you do. And of course, capital gains tax, we talked about the gains we make on capital transactions or capital income, ranging from things like that. And you also have NITD. NITD is the levy paid for National Information Development. It's called NITDA, right? And also Police Trust Fund. And Police Trust Fund was just being brought, into effect to say that companies need to find a way to fund government being able to, finance security, right? And that was the idea behind the Police Trust Fund, and which has implementation has long started. And it's just that it's a bit of a small money, but of course it's expected that those funds will be used by government to channel to build securities. And the information technology, the NITDA levy, is being paid by some companies, especially when you're in the IT sector, GSM, communication companies, and companies that operate in the information technology sphere, so that government can also have enough funds to build technology. Or, but again, you and I are not sure of what government has done in that regard. So these are some of the tax provisions obtainable in our country. You have company income tax, capital gains, personal income tax, which regulates individuals, Petroleum Industry Act 2021, which is the PIA, was introduced by Finance Act, part of the initiative behind Finance Act, but was introduced on its own as a Petroleum Industry Act. Now, what this act does is that it has brought into effect, a new taxation terrain for companies operating in the petroleum business, in the oil and gas sector. And so, for every company that whose license are yet to expire, it simply means that they can decide to be taxed under this Petroleum Industry Act of 2021 or stay under the PPT Act of 2004 in terms of how they get to be taxed when you are a joint venture or, when you operate in the oil and gas sector, depending on the kind of operations that you do as an oil and gas business. And you also have transfer pricing regulations, which govern transactions between companies that have related parties and does business with their related parties in and out of Nigeria. And also to talk about in what pattern or what measures they'll be taxed, and looking at the fairness of transactions or billings amongst all of those entities. And you also have stamp duties, which is on dutiable documents like talked earlier, value-added tax, TET, which is the education tax, industrial development income, which is the DITRA, NITDA, like I explained earlier, and Finance Act. So currently, before now, what is common for us as a country is to have changes being done in legislations, tax legislations, but times have changed, and what government does now is to look at the weaknesses or areas that require clarifications or tax administrations and improve on them on year-by-year basis. So Since 2019, government has been introducing yearly Finance Act to say that Finance Act 2019, 2020, and 2021. Of course, by January next year, we would have Finance Act 2022. And, all of this had been done to introduce, amend tax legislations that are existing but are weak, or where you feel that there are lacunas and they need to be covered. This governs all of that to make sure that, look, government gets as much money as they desire in order for them to fund the economy. That being said, looking at tax at a glance, right? Tax is it's not as easy as everyone thinks. It is when you practice tax as a finance professional that you understand that tax is not a child's play, because there are complexities in tax. So unavoidably, tax is inevitable, like we mentioned earlier, and everyone has to pay, even if you're a company or organizations. And of course, everyone wants to pay the little that they can. And that's where you talk about tax evasion and avoidance. And, avoidance is legal. Avoidance is a way for you paying the minimum tax as minimum as possible, using the loopholes in the extant provisions. And evasion is criminal, because that seems to look at more of an aggressive tax planning or non-disclosure to make sure that you don't pay any tax at all, and things like that. And so that creates the need for finance professionals, to talk about, okay, as a finance professional, if I want to practice tax, for instance, what can I do? How do I stay relevant? How do I function in this industry? You would agree with me that as a finance person, you can't be everywhere, right? You can't be that IFRS guru that you want to be, and at the same time, you're that tax expert. Accounting is that broad, because, out of all of us accountants, you have people who do management accountants, cost accountants, project accountants. Quite a lot of, professions spans from our profession as a whole in terms of accounting. And so if you look at taxation on its own, you'll find out there are a lot of things you can do in taxation when you have a career in taxation, which ranges from consultancy, management advisory, being a tax analyst or tax specialist, certified public accountant, being a tax consultant, either as a sole practitioner or you work in an accounting firm, or you're just a tax preparer who does advice to people, prepare their tax returns, or you're just a compensation coordinator or a tax attorney. You would agree with me that we have a lot of tax attorneys who practice taxation, and that those are the attorneys or guys who, when issues get to court in terms of tax matters, are the ones who intervene. And you would understand that for you to practice tax in the country, you have to be a member to any of, the accounting bodies. It could be the ICANN, could be CITN, depending on which one you decide to focus on, right? You may not be able to practice everything. So there's a need for you to couch, okay, out of all of these careers in taxation, which one of them does my firm or myself as an individual want to focus on? Or if I'm an in-house accountant of a company, what part of this do I want to assist the company in taking up on? Even we have an external consultant to run the business and all of that. And so taxation as a practice is just broken up into two, which is compliance and advisory. All of the careers we mentioned earlier, these are the most common ones. You are either a compliance person who understands the nitty-gritty of the law and help your clients to, meet up with deadlines, file their returns, do their computations, attend to their tax audit exercises, or, make a defense for your clients with the tax authorities. Or you render tax advisory service in terms of advising them on efficient business plans, or how to proper structure their businesses in such a way that they get to take advantage of the loopholes in the tax law, or it enables them also to make informed economic business decisions. And so you find out that a lot of consultants, would, take this together and offer them, as a company which makes it more robust for you to be able to advise your clients properly and make sure that your client is not found wanting on any of the edges. Now, some very key things we need to understand, in the tax terrain is looking at the legal maxim of nemo dat quod non habet. What that means is that you cannot give what you don't have. And so, as a tax or finance person, there are things that we sell, things that you sell as a professional that keeps you relevant, in terms of how successful you're going to be as a person, as a firm, as an employee, or whatever. And you'd agree with me that knowledge is power. Ordinarily, knowledge should be power, except in develop because we're knowledgeable in that sphere. And they also pay us apportionment to say that time charge out rate. I charge 20,000 per hour for an associate, a partner is X amount, and things like that. And so that is what we sell. And that's what keeps your relevance in check, to make sure that you are still in tune with reality or what is obtainable in your environment. And so, as a tax professional, sometimes you ponder on some, questions as regards, do you want to practice locally or you want to practice in the foreign sphere? That would determine where you decide to channel your skill set to. So, if you want to practice in Nigeria, for instance, it simply means that you need to be aware of the tax provisions applicable in our country. Or if you want to practice abroad, then you need to look at you enrolling in, for instance, courses in international tax. The most common one is ADIT, which is Advanced Diploma in International Taxation, and from which you can pick options of countries that you want to practice in, or, decide to do UK tax in ACC and things like that. And when you are making those kind of decisions on what, as a tax consultant or a tax professional, what you need to gather as a skill, you might also want to consider that in this country that you want to practice in, what's the need for a tax professional there or a consultant. And that terrain will give you an idea of what you need to focus on. And the need for you to also understand that when you step out of the shores of Nigeria, right, you have different zones, right, would have different authorities in their field, in their jurisdiction. And so you cannot be a general practitioner. You are the same one that is practicing in New York. You are the same one practicing in New Jersey. You are the same one practicing in Texas. Some of those jurisdictions have their own peculiar tax rules that binds companies or entities paying tax in those settings. So all of this we must be aware of. And the skills for you to gather simply means that, look, you cannot practice taxation without having any of these components, right? Your ability to pay attention to detail is key. There's going to be a lot in terms of tax practice that if you do not pay attention to details, you are probably going to run your clients into more problems than if they did not have a consultant, And so you must have the problem-solving skills, being able to intermediate between tax authorities and your client, and you must also be able to communicate. And apart from that, your ability to also be informed in terms of artificial intelligence and technology is key. And also in terms of commercial awareness and leadership, you have to be aware. You have to be aware, and you must have the leadership instincts. It makes you a better professional as a tax practitioner or finance person. Now, there's a direct link between taxation and information technology, especially in the Nigeria of today that we are. You cannot talk about tax without being computer literate, you being conversant with accounting software and packages, or, not being up to date in terms of what is happening. Technology is now a very key thing for professionals to have. You cannot afford to be a finance person without having skill set on softwares, accounting softwares or information technology as to how to improve your clients or to interface with foreign professionals that also practice taxation. Now, before going about the normal taxation in the other, course of their business, but COVID-19 brought in a lot of things. Government, different countries started seeing the need for government to give tax cuts, introduce incentives, extend deadlines for people to comply, expunge penalties for non-compliance, because people were going through a lot. So everyone reacted to it differently. Some gave tax refunds, some gave tax incentives, and all of that. And, that has also created a new environment for tax practice in countries where you do not have to be there physically, to run business or give tax advices. Then talking about how you make yourself relevant in the face of emerging tax trends. The business environment is changing, and the need for you to be relevant is very key. Without your relevance, you're probably going to have a lot of issues, having to resolve issues for your client, or even staying knowledgeable enough for you to render service to people and earn fees from them, or make it a profession. And part of these ingredients for staying relevant is professional practice. Professional practice means that you either practice on your own, you have a firm of your own that you run, or you work in an accounting firm, where tax is being practiced. And if you are in that kind of business environment, you get to be in tune with a lot of things. You get to be aware, you get to have a lot of knowledge and all of that. And also, again, trainings and certifications. Training is key. You have, depending on which jurisdiction you want to practice tax in, for it to be relevant, you need to go through a lot of trainings and certifications. You could decide to pick a sector to say, okay, I just want to be an oil and gas tax expert. And, you direct your energy to getting certifications in that field, getting trained in that sphere. Because, again, as a tax professional, you can't be everywhere. You cannot be the same. You may not be as effective as you should be when you are the oil and gas expert. You are still the same industrial and consumer market expert. It's achievable, right? But for those professionals that do not have interest in some other fields, there's a need for you to evaluate and look at what field you actually have interest in, and get trained and get certifications in that. To keep being aware of the changing dynamics in the terrain of taxation, and also intentionally subscribing to newsletters, from local and foreign firms, so that you're aware of what is happening abroad, home and abroad, and all of that. Also making subscriptions to case laws, in terms of local and foreign case laws. Case laws talks about judgment being given, where there are issues in terms of agreement or interpretation of the law. Clients, taxpayers can decide to go to court with federal government to say that, this tax is not admissible and I'm not going to pay, or there are basis for disagreement. These are areas to consider. And for you to also be relevant in your field or in this sphere of emerging tax trend, you also need to be able to build quality network. You don't want to have a network that all you guys do is enjoy, chill, go to parties, go to Cubana, eat fish, Fridays you club. You just don't want to be in the network of, the social, gatherings. Of course, social gathering is key, but you also want to earn a living by hanging yourself around the quality network, because you have friends who will turn to your clients. You have mentors who also turn to your clients, and the need for you to stay, relevant is key. And also talking about your investment in books and magazines and being members of professional bodies within and outside the country is very key. Now, while understanding all of these ingredients, it's good that we understand that, look, quality relationship in terms of business owners who can turn future clients and friends who can turn future clients is very pertinent. I can say categorically that the firm where I work, Pedabo, maybe we bid for about 20-30% of the jobs that we have currently. 70% comes from referrals, which are people we've worked for and people who trust, the kind of service that you render. And we say, you know what, I think these guys can help you. I think these guys can help you. And that has kept us in business. It has kept us relevant as a firm, and has kept us in business. And you need to be careful when you're trying to stay relevant, right? You can't just be driven by fees. You might have a client that is willing to pay you 100,000 naira for an engagement because that is what it is worth, right? And it might also be worth more than that. But sometimes you look at the bigger picture. That client paying you 100,000 might be the one who's going to refer you to a client that's going to pay you about 2 million naira for just one single engagement. And so, as long as you're relevant and you have all of the key ingredients we mentioned earlier, you're going to have all of these benefits. You and I would agree that right now, I have quite a lot of colleagues that are leaving the shores of the country, for career progression and all of that, and they practice taxation. So what that means is that, look, for all of these guys, right, you are not, as long as you know what you're doing, you are not going to have a career stagnation or you are not going to have limitations in terms of opportunities. So it's very key to stay relevant so that you can have all of these benefits, in terms of global exposure and all of that. Of course, how do you develop yourself? This talks about emotional intelligence and cognitive competence. Being a tax consultant or a tax professional, you need to be able to think outside of the box. You need to be able to think ahead of the tax authorities, because what your client pays you for is value, right? And when they pay for that value, you want to be sure that they are getting that value in full. And so for your ability to have cognitive intelligence and also to be able to have emotional intelligence helps you balance relationship either with the tax authorities or with your client, that you interface with on a daily basis. Well, I think time is being fast spent. I'll just try to speed up because of time. As a tax professionals, you need to be aware of some certain things. For instance, IFRS, which are the global standards, you need to be informed. If you do not have the knowledge of this, it makes you an inefficient tax consultant or tax practitioner. These factors of the OECD conventions, United Nations, information technology, all of these are things that as a tax professional you should be aware of. It gives you a broader view of how to stay relevant in that field, and part of what has been done also by countries, is to create tax treaties, and tax treaty is it's just an agreement that has been signed with countries, right, between Nigeria and whatever countries to make sure that you create an ease of business for companies dealing inter zones or inter jurisdiction, so that when you're doing business with UK, you have incentives of selling things that gives you an edge. So you want to deal with companies in the UK, which is beneficial for you. Currently to date, I think Nigeria has about 16 thereabout tax treaties. Canada, Pakistan, Belgium, France, all of these countries, which were signed into force and had effective dates, and which is still applicable till date. Now, you are a finance professional, you're a tax professional, a tax consultant, you're relevant in your country. But you also need to be aware of what is happening in the international tax space, right? Currently now, there's been a change of global tax. When you talk about global minimum tax payable by companies operating interzone, so as at 2021, there were push by OECD, to look at, okay, if you have companies that exist in about 7 countries, how do they get to be taxed, right? And so they decide to implement a 2-pillar solution to say, you know what, let's ensure that people get taxed of what is equitable where they operate. But of course, they also set revenue threshold, to say that if you're operating in this zone, or you're operating across countries and you do not meet a certain revenue threshold, right, you don't get to pay taxes in those places. However, when you cross that threshold, then you get to pay tax, which is being set around 15% of the profit that you make in that zone. And the Pillar 2 solution was talking about the minimum tax payable, which means that what is fair enough for you to pay. And that was why this it was introduced that, look, this Pillar 2 is not seeking to eliminate tax competition. We're just looking at what we can all agree on that will be mutually acceptable. And so in Nigeria, for instance, a lot of companies have signed on to this. I think about 135 countries have signed into this now. But Nigeria has not signed because we have our own tax rules that govern companies that are non-resident or foreign companies. And that has been embellished in Section 13 of CETA, that talks about you being able to tax non-resident companies. And then so what SCP means is that, look, we are going to have thresholds for you to say that you're carrying on business in Nigeria on a significant scale. And as long as you meet that threshold, it means that you're doing business on a substantial scale and you should be taxed. So part of the time, you're deemed to be operating on an economic scale in our country. And because of that, you should pay tax. And so, if for instance, the set target is companies that have turnover of about $160 million, when a company does not meet this threshold of revenue, and so that is why our country has not signed up to that and is not subscribing to it, because our economic needs will not be we have is doing a human factor there, but I work for a brand and I'm sure of the brand I work for, So these are major accounting firms who do tax service in the country. And in terms of tax, you cannot rule back these entities, right? In terms of getting solutions. We'll also take up classes in future. It will enable us to look at some of these changes that have happened in the tax fair, right? Changes introduced by Finance Act 2019, 2020, and 2021, because, again, tax is quite broad, and we may not be able to finish everything at a time. But, this is more like an overview to see the key changes that have been introduced over time, and which ranges from when VAT was increased to 7.5, that happened in 2019, to when we talked about foreign companies being taxable here. That was also introduced in 2019, talking about excess dividend tax, requirement for you to get SIN numbers as a company. And the companies are being governed by Section 16 of CETA. And, there are some peculiarities in that act, the Finance Act, and also excess dividend tax. So, what excess dividend tax does to say that distribute dividends? So to talk about these other changes, time will not permit us to talk about this. I mentioned the classification of Finance Act bringing small companies earlier, and also introduction of the tax bonus and all of that. Finance Act 2020 also had its own, brought about some changes, amendments, and this Act 2021 has also brought about quite a lot of changes. We should put in some new provisions, amend others to make sure that, look, we are operating in an equitable environment, and our tax laws are also in tandem with global best practices. And so, as a country, right, what FIS has now as budget for 2022 is 10 trillion, because they made 6 trillion in 2021. In 2022, the budget is 10 trillion. So a lot of companies are facing, pressure left and right from all of these activities. Quite a lot of companies are now getting a notification for tax audit, investigation, debt review, monitoring, and post-VAT implementation. Now, you need to be careful. Because of these current activities being driven by these tax authorities, if you are practicing taxation or you are an in-house accountant for a company, you need to start gathering, preparing for all of this. If you have not gotten notified, there is every tendency that in the next couple of months, you're going to be notified. So you need to start keeping your books in order. Make sure that your records are not conflicting. For instance, your general ledgers are not conflicting with your trial balance. It's not conflicting with the figures reported on your audited account and all of the tax declarations you make. Because government is looking for money by all means. And all of these activities are being intensified. Categorically, I can tell you that I'm sitting on close to us. Government needs money, and the economy has to be funded, So you need to be well prepared ahead of time, and make sure that we are not caught in the web, practicing in this our profession. And so, for me, no.
Okay, sir, I think there is a glitch in your network. We can't hear you anymore.
You put on there. Hello? Can you hear me now?
Yes, we can hear you now, but there was a break in between, maybe due to network glitch at your end.
Oh, okay. So I said that no matter how developed we get as a country, right, or even abroad, AI or robotics can only do part of the engagement in terms of the programming, what goes into the system, what gets uploaded, and all of that. But them taking over our profession, I don't see that happening anytime soon, right? It might get to that level, but the level where we are now, and that's why it's key that because we're not dealing with robotics, right? The need for us to build quality network and relationship, because you're a tax consultant or a tax professional, does not mean that you should be, unnecessarily harsh or aggressive with tax authorities or, clients. You're always going to need those people. The client, the tax authorities, you can meet them on several engagements. And so AI and robotics cannot take over our work. Our relevance will continue to be there until when all the processes in the country are being automated. I would like to stop there now because of our time, and would welcome questions or clarifications were sorted. Thank you so much.
Okay, thank you very much, sir, for the insightful presentation. We appreciate your time with us once again. Okay, so from the chat box, we have people soliciting that you send in your slides to us so we can actually have a review on our own after this session.
Not a problem. I'll send that immediately after the session.
Okay, then I will start with the questions. I have some questions for you, so we can just go as fast as possible.
Okay.
Then with the list of taxes to be paid in Nigeria becoming inexhaustive, okay, now, don't you think that with the numerous changes and trends in the Nigerian tax system, and with new taxes coming into place every now and then or at intervals, don't you think the canon of simplicity is actually being abused here and is actually making compliance issues, like it's making compliance difficult for clients and individuals as well as corporate entities in Nigeria?
Okay. The truth is that, yes, what that has done is that it has further introduced complexities into the tax terrain. That I can't argue, but that is where we are. And that is why you see that quite a lot of professionals are engaging the government, to say that, look, rather than we having this multiplicity of taxes, can we not just narrow it down to just say 2 forms of taxes? And even if the percentage will be high, because what you find out is that a lot of times you're even paying tax on a multi-level chain, right? We should not be. But because of the country that we are, there's an abuse of power, where legislators are feeling that the place where we are as a country now is to keep introducing taxes. Hopefully next year, we should also be having a contribution to the NYSC scheme, which will also be paid by companies, So you have laws being legislated here and there, and it's just unfortunate. That's the environment that we have, And of course, the changes in that terrain is also forcing we tax professionals to be on our toes, because you can't afford to be not aware of things that happens to your client. Or things we hope for better days ahead. Till that happens, we just need to keep staying relevant, staying updated with our knowledge and the practice as a whole. Thank you.
Okay, thank you very much for your response, sir. So another question is, with the Nigerian government specifically drifting from other revenue sources to the tax revenue source now, or as a source of revenue for the country, now, should there actually not be a height or an extent now to which corporate bodies and individuals should be taxed? Like, okay, with numerous taxes coming into place and with new taxes even being proposed, like, should there be a height now to the level of taxes that should be paid by individuals and corporate entities in Nigeria? And to what extent do you think that the accountability on the part of the government now and the utilization of revenue from taxes, what extent do you think the accountability would go, especially to compliance now by Nigerians?
That's quite a tough one. That's quite a tough one. The first part of that question is the fact that should there not be an height, right? Ordinarily there should be, but because we stay in a lawless society, right? Legislatures can do anything as long as it gets the president's assent, then it becomes law, right? You would expect that in sane environments, you cannot tax companies beyond a certain level, right? The kind of taxes or multi-layer taxes we have in this country, they don't have it in the UK, not even in the US, right? And that's why you see that for some form of taxes that they pay, the very few ones might be high, right? But it's streamlined. But because we stay in a lawless society, and apparently people who make these laws are not really forward thinking in terms of how the country can also generate revenue of its own. We have quite a lot of potentials that have not been harnessed. When we were growing up, you would say that quite a lot of industrialization was on. We could export cocoa, export our textiles, Ankara, fabrics, quite a lot of things, from farm produce, things being done, locally by Nigerians. But we found out that all of those industrialization have gone to cessation by inability of the government parastatals to maintain them, right? What the Nigerian government is fond of is collecting monies and not being accountable, because they are not even, there's no accountability for the taxes that are being paid. Of course, you would say that there are projects going on, road constructions going on here and there. You would see that no one is holding anyone accountable. And until we get to that level as a country, the country may never thrive like it should, because the funds are being diverted for every other irrelevant needs. The legislators will not sign off on bills when it's not of personal benefit to them. They will not implement some policies because it's going to have an adverse effect on them. So in terms of that, there should be a night, but of course, you and I know in Nigeria is a special country with a lot of abnormalities, that is also getting professionals and some people brain drained because you cannot figure it out. So currently now, I'm not sure we can actually enforce a night in terms of how. Until we get there, we are where we are. We will just hope that better days come ahead. Thank you.
Okay, thank you very much for the response, sir. Okay, so there's a question in the chat box. The person says, hello, sir. Good evening. You are doing great. Okay, the person said his question or her question is that when his company or her company supplies pharmaceutical products to government institutions, that they are being charged 1% stamp duty on the invoice value and 5% withholding tax before payment. That his question is now, how is stamp duty to be treated in the financials?
Oh, okay. Okay, because stamp duty is not a tax per se; it's a levy, right? And it's a duty paid on agreements where you have an agreement with any government entity and all of that, But again, those are business costs, right? Which means that, look, the best way to treat you having stamp duty in your financial statement, right, for that purpose, it's either to have it expensed as your cost of sale or expensed as operating expense. But there are times where the tax authorities will say that no, it should not be expensed because it's a duty that is paid. So if it should not be expensed, you are going to tax, as a tax authority, you're going to be taxing me on my revenue, right? And so for every associated cost to that revenue, it has to be expensed in the P&L. So the right thing for you to do is to expense them in the P&L, whatever cost attributable, except for the withholding taxes. The withholding taxes would create your current asset, which will be taken to withholding tax to be used to offset taxes, warehoused in your current asset. But for the stamp duty part of it, you need to expense it to the P&L because it is an additional expense that has reduced the inflow that you're getting as a company.
Okay, thank you for that. Yeah, I think that settles that. Then another question is that what can a professional do when he has a client whose desire is just to settle directly with the tax authorities? That is, in this instance, the client is not willing to present books of accounts and he just wants to settle tax disputes without just outside resolution now with tax authorities. They don't follow the formal due process. Then another question is, what can a professional do when a client is outrightly putting a particular target or limit on what he wants to pay as tax? For instance, companies' income tax.
It's quite a tough one. I understand that thought, but it's a very tough one. Now, the ideology is this. Because we are in a lawless society, right? You have instances where companies would always want to work their way out of, tax issues by settling their way through and all of that, right? As a tax professional, let me take, for instance, the firm where I work. If we have a request for documentations that can enable us address a position, right? And you don't make it available, or you're not willing to make it available, we'd rather not go that route of you having a negotiation or whatever you want to do. We are going to stop at where it becomes professional for us to do so. Whatever negotiation or whatever thing you want to do, you won't serve as an intermediary. You can go discuss with them yourself to say that, guys, blah, blah, blah. But as a tax consultant, and a professional, those are not things you should be caught doing. Because at some point, you lose touch of your professional skill. So it renders all the knowledge you've gathered, the certifications, the hard work, the sleepless nights, it renders them useless. It's not like a buy and sell, which makes ridicule of the profession, where, you know, you have FIS raising issues on taxes to say that all of these expenses are unsubstantiated because you're unable to provide documents. We are going to add this back. And you know that, look, within the provision of Section 24, it talks about allowable deductions, right? 27 talks about deductions not allowed. And this ordinary should form deductions allowed. So why are you disallowing it? Clients, can I have this document? The client say, oh, we don't have it. No, we don't have it. The client might also not want to pay. Going the professional way about it to say, guys, you know what? You have an obligation here and you didn't fulfill it. Let them hand back this thing and tax you on it, right? And so for some companies, so what would rather do is that sometimes you just play with the FIS that, you know what, let's have a win or a take. Okay, maybe you can drop some of these issues for just being, for just putting the human face, you know, kind of drop this, okay, we accept this, or we are, you know, we are safe to this and all of that. But, you know, to go the improper way of having to, it's not always, it doesn't end up nicely sometimes. Those things can come back to haunt you, because you might have times when you have international companies who want to do business in the country, and they're looking for professionals that are professionals to the core. You won't be part of the people that will come to mind, because those international companies don't take tax. All of the clients that we have, right, that are foreign clients, for every document we request for, they give it to us without relent, you know. But for every Nigerian clients that we have, you know, there are always issues with documentations, being tidy and all of that. It's sad, but as a professional, so what you should do is that you should try to stay clear those kind of issues. So let me give you a practical instance. We've had a meeting with a client that just engaged us as a firm and said that they wanted to have a meeting with us. And when we got there, they projected their screen to say that they had a consultant before, or they just feel that it's high time they change and all of that. And they projected the figures and said that we did our computation in terms of their business, right? And we send them what their computations are in terms of tax liabilities. And they said that in 2019, they paid taxes of about 4% of profit. Effectively. And based on our own advice, now achieved than that. And I was at that meeting with the engagement partner, and the simple word he said is that, look, we are not magicians. There's no way we can achieve it. And for us, that was it. And the client went and said that, oh, Pedalboard is not after my interest. But they came back to say that, oh, okay, maybe we can give it a thought. And at the end of the day, we tried to move them to that level. You know, so sometimes clients need to see, you need to make them see reason why they need to stay compliant. If you look at the Nigerian business environment, of course, you would see need for you to go the other way. But being compliant is key. And you cannot afford to have your clients having a pool of clients where everyone is just heading towards that direction. It makes mockery of you as a tax professional. So we need to be careful. Thank you.
All right. Thank you very much, sir, for the amazing and wonderful insights. Okay, I think with that, we've come to the end of the question and answer session. Okay, so I want to use this opportunity to appreciate you once again for making it a time with us this evening to actually speak to us, so we can actually learn from you and also from your experiences. We are anticipating that going forward, we'll get to hear you speak to us more, or you respond to our call, then we need you. So thank you very much for this one this evening. We appreciate you, sir. Okay, so with that,
Thank you so much. Look forward to future engagement with us. Okay, some questions are coming in also from the chat box. I can see a question from I think Aziz Adepola. Okay, so he said, for how long can you decline FIS field audit for a client? The truth is that you can only postpone the evil days, but at some point it's still going to happen. And you know, the problem is that you can only delay to make sure that you can delay for as much as possible, right? To make sure that, oh, you try to gather documentations, you put the books in check and try to gather as much documentations as needed. But in terms of the exercise itself, you are evading tax. And when you are being seen as a tax evader, it takes you to another level of scrutiny to say that, okay, the FIS team and investigations will come check your books. And at that point, when it comes to investigation, audits can still be like a 60%, 70% check of your record. When it comes to investigation, is 100% documents. That means you're hiding something along. The timeline is not too long. And gather as much document as you can and kickstart the audit. Even if you don't have everything for a start, there are some very key things you should have, which is your audited account, tax computations, VAT returns, your trial balance, to have all of that in place. And to have all of those that could put your client in trouble. Foreign part postponed for too long, really. Okay, so there's another question that says that be as practical this year as possible. It's possible, right, to reduce your liability on payroll. But the moment you go outside the reliefs and the incentives granted by the tax laws, you're going to have a lot of issues later at the point of scrutiny by, say, for instance, LRS, if you are in Lagos. Because what they would do is that they would report it on your AFS and do a reconciliation to the period you will not only pay that 19.2%, you will not be at 10%, and interest is going to be at 21%. So, okay, said conversation. So I said you want to, right? You reduce your PE liability on the payroll. Okay, Abami says, can you take that again? If you have, it's very possible for you to reduce your PE liability on your computations. But if you do not do it within the ambit of the law, it creates more problem for you as a company, because your staff on whom you do want to get angry or you wouldn't be happy. Can everyone hear me now? I can see there was a break in conversation.
Yes, we can hear you now.
Oh, okay. The staff on which you're saving that PE for, at the point where the LRS comes checking your book, those staff would have gone and your company would have more obligation or exposure to pay, because you don't want your staff to be, disgruntled. But again, the law is the law. So if you want to reduce the pay liability, you must make sure that they are within things that are permissible in the law. You could advise them to do voluntary pension compliance, contribution. You could advise them to take mortgage so that they can also get a waiver, a relief on interest on mortgage. You can also advise them to do contribution to some other schemes that are permissible within the law. But the moment it goes outside that, when the LRS comes or any of the state authorities and they check your books, you will be having more liability to pay, along with interest and penalty at 10%, interest at 21%. So you need to weigh all of those options before you think about reducing your pay liability on your payroll. So I don't know if that answers all the questions, or if there are any other ones.
Yes, I think that has thrown more light on questions asked. So thank you very much, sir, once again for your time. We appreciate you.
Thank you for having me. Enjoy the rest of your evening, everyone.
Thank you very much, sir. So with that, we would be drawing a curtain on this one. So we hope to have you all on this session come September. Okay, bye, sir. So thank you very much, everyone, for making it the time out with us this evening. We look forward to having you once again next month. So we say goodbye from here.